From the floor of the CME Group, this is Danny Riley on this Thursday, August 12th, with today's Mr. Top Step update. You know, the markets didn't really close out that well yesterday. They closed, the S&P particularly closed at the 1085 level. And then in Globex last night, boom, down they go. And what happened was the S&P sold off probably 10 or 11 handles in Globex, and then we had this big bounce overnight. There was a 10-handle rally overnight. And then this morning, we're back down in the dumpers again. Now, the way the way it worked is we closed at 1085, but this morning we opened up at the 1070 half level. And when we did open at that price, Goldman Sachs came in selling 1,000 big S&Ps. The whole pit bought them up. Now, with the difference of what yesterday and today is that yesterday we opened sharply lower and then we sold off sharply. And today we opened sharply lower and then the low was made exactly on the open and exactly the same price as the Globex low overnight, which was actually made going into the close before the 8:30 open. You know, look we've been talking about this ever-shrinking world that we live in, and we really do believe that we do live in an ever-shrinking world. You know, this morning was a good example. Export prices came in lower than expected. Import prices came in lower than expected. Jobless claims lower than expected. Now, you know what? It's hard to paint a pretty picture into this. As far as the rest of the day is concerned, our equity report came out saying that we wanted to buy the early weakness. It was a very, very tough call. And then after the market started to rally a little bit, Goldman came in and started covering those futures that they sold into us. That was a key. And furthermore, another key to the day was that the consistent price action that we saw yesterday of not being able to hold premium against the S&P and the S&P cash created all that sell program activity. Well, today we're seeing the exact opposite. Every time we get down toward a sell program level, we may get a little sell program off, but the premiums go widen right back out right into buy programs. Now we've had a good rally back up to unchanged. We got right back up to where the market closed yesterday, and we've come down a little bit. Now, what we're going to continue, or I'd like to continue to do, I don't mind getting up here and talking about the markets and kind of like the street guy kind of view. But what really, when it comes down to it, you need the other parts of that. You need the technical side, you need the analytical side, you need the macro side, the quant side, whatever side you want. But my side is I like talking to Tim and Top Notch, and Tim, we're going to let Tim come up and take it from there.
All right, Top Notch Trading back in again today with an update of what transpired yesterday. Top Notch was looking for a possible test yesterday of 84.70, a two-week low, and bingo, they hit 84.5 with an 85 settle. Not too bad, but overall he's still looking for half the year at 66.5, and today, like Danny said earlier, they broke them 11 handles on the open on Globex last night after the close. Rallied them up to 87.5, and then right before the open they made the Globex lows, and that's when the S&P came in and did make the Globex low. But what did they do? They go right back up to yesterday's low of 84.5 and 85. And what's key about that right now is the NASDAQ followed suit. The NASDAQ did exactly the same thing as the S&P. They opened up at 837.75, broke 25 handles, came back and made just slightly new highs, and then right before the open, all hell broke loose and they were down. And then what does the NASDAQ follow through and do? 37 high, 1837 high, settle of 1837.75. Top Notch did see that price of settle is key, and right now it's holding. But the whole key to the rally up there was that first trade at 81.60. The biggest amount of volume in the first half hour, 40 minutes today was at 77 even. And when they made an 81.60 high, I looked into the charts, the crystal ball, and saw 77, and that was the turn. If they take out 77 with a 77 offer, we're going to go test the lows. Well, 77 being the last low, saw the bids come back up, and now, like I said, they made new highs, and we're sitting there stalemated at the settle. The only way these things can go higher is see a bid above yesterday's settle, and the all-important daily pivots are there. 47 even in the NASDAQ future and 90.30. That's 10.90.30 in the S&P, 18.47, excuse me, in the NASDAQ. That's the only saving grace. Top Notch thinks this rally today is sort of a relief rally, and things still look bleak. Top Notch mentioned last week or 2 weeks ago that he's not going to wallpaper on paint in the month of August. Top Notch doesn't like the month of August because Top Notch believes in September, October, Bad Moon Horizon is in the picture. We won't see that last high of 1126 half, this guy says. We will not see 26 half again before New Year lows are made. I'm stepping out on a limb, but I expect the SPOO to get below 1006 even and possibly see 984 to 982 before we ever see 1126 half. We'll see what happens. Have a good day.
And one last little thing. We have a very basic trading rule, and one of them is that the markets tend to bottom the Thursday or Friday the week before expiration. Next week is the August expiration. Now, Tim just laid out a very negative scenario, and I want to rebuttal to that. You know, the problem with thinking that the markets are going to just go straight down is that they don't just go straight down. They generally go up and down. And the problem with the idea that we're going to come crashing down in September or October, we're not completely sure about that. And the main reason for that is that there are very, very, very few investment vehicles out there like the stock market. And what money is floating around there is trying to chase returns. We'll see if Tim's prediction is right.